All right, so hey, there's some kind of update that Bitcoin has been going down, and market for cryptocurrency apparently is not so good in terms of investment. Now, I actually don't understand about Bitcoin that much. I understand a basic idea, but for the purpose of the video, let's go through what Bitcoin really is to all the way understanding why is people losing money in cryptocurrency.
That's an excellent topic to dive into, and it's a very timely one, as news about the ups and downs of crypto is always in the headlines. We'll take it step by step in a simple way you can easily follow while you walk. 1. What is Bitcoin really? Digital cash. Imagine you want to send money to a friend overseas, but you don't want to use a bank, PayPal, or any big company. You just want to send digital cash directly. Bitcoin is basically digital money that works without a boss. It's digital, you can't touch it. It only exists on computers. It's peer-to-peer, you send it directly to another person. No bank or government is in the middle to approve it, hold it, or charge fees.
So a question I have is that, we've heard so much and people actually using Bitcoin for investment, it's speculative, but who are the people or who are the businesses that currently right now actually accepts Bitcoin as a payment?
That is a fantastic question that gets right to the heart of how useful Bitcoin really is. You are right, most people talk about it as an investment, but the original idea was to be a simple payment system. The short answer is, many big companies accept it, but usually through a middleman. Here is a breakdown of the types of businesses that accept Bitcoin as a payment for goods and services right now. 1. The technology and e-commerce giants. These are often the earliest adopters
Really?
because they are comfortable with digital money. Microsoft, you can use Bitcoin to top up your Microsoft account and then spend that money on things like games, movies, and apps in their online stores like the Xbox Store. Newegg, this is a very popular online store for computer parts and electronics. They are known for being crypto-friendly and accept Bitcoin directly. Shopify merchants, indirect. Shopify is the platform that runs tons of smaller online stores.
All right, merchants, I can
Merchants on
understand.
Shopify can easily add options to accept Bitcoin using a service like Coinbase Commerce or BitPay. This means thousands of small to medium businesses can accept it. 2. Travel and entertainment. These industries often have customers who transact internationally, so the low fees and global nature of crypto are appealing. AMC Theaters. The large movie theater chain accepts Bitcoin for tickets purchased online. Cheap Air.
Okay, I understand. All right, it's been being implemented, but I'm actually from Malaysia and I wanted to know how relevant is this? Like, is there any businesses in Malaysia, or let's open it up a little bit, Southeast Asia, China, East Asia, and even Australia? Any businesses accept Bitcoin as a form of payment?
That is a great question to ask, especially since you are from Malaysia. It helps us look at how this technology is being used in the real world, not just as an investment. The simple answer is this. You won't often see a sticker that says Bitcoin accepted here in a Malaysian shop yet, but you can still spend your Bitcoin almost anywhere thanks to a new payment card system. Here is the breakdown for Malaysia, Southeast Asia, and the wider region. 1. Malaysia and Southeast Asia, the card method. In Malaysia and much of Southeast Asia, the most practical way people use Bitcoin to pay is not by sending it directly to a merchant, but by using a crypto debit card. How it works, companies like BigPay, in partnership with AAA, or the Ubik crypto card, allow you to connect your digital wallet where your Bitcoin is stored to a Visa or MasterCard debit card. When you buy coffee or groceries, you swipe the card like normal. The payment processor instantly sells the exact amount of Bitcoin needed and sends the Malaysian ringgit, MYR, to the store. The benefit. This means any shop, hotel, or restaurant that accepts Visa or MasterCard in Kuala Lumpur, Penang, or anywhere else automatically accepts your crypto without even knowing it. The merchant receives stable MYR and you get to spend your Bitcoin. Specific examples. Gubat.care, Malaysia. This was one of the first Malaysian online pharmacies to accept Bitcoin using a system called BitPay. Singapore companies. Singapore has seen many companies adopt direct crypto payments, especially in fashion and luxury, like the homegrown fashion brand Charles & Keith and the online sneaker marketplace Novelship. 2. Australia, very crypto-friendly. Australia is generally one of the most advanced countries for crypto payments. Payment
Wow.
cards. They have services like CoinJar that offer a MasterCard, letting people spend Bitcoin and other crypto just like a regular debit card at most retailers. Direct payments. You can find smaller businesses and tech-focused retailers that accept it directly, often using similar payment processors mentioned before. 3. China and East Asia. This area is more complex because of strict government regulations. China, strict regulation. Direct use of Bitcoin for payments is heavily restricted or banned. The focus there is on the digital yuan, ECNY, which is a government-issued digital currency, not a decentralized cryptocurrency like Bitcoin. Japan and South Korea. These countries are very active in crypto trading and have clearer laws, but day-to-day retail payment acceptance tends to be in specific tech-focused areas or through those same crypto debit card solutions. In a nutshell, for the average user in Malaysia, the best way to spend Bitcoin today is by getting a crypto-linked debit card. This bypasses the need for the individual shop to set up special equipment, making virtually any place that accepts standard card payments.
So what you're saying is that I need to wait. Tell me the step by step. How do I get my crypto link debit card? What are the steps that I need to do? Explain it to me in a simple point form.
That's a great question. Yes, that is exactly what I'm saying. The crypto card is the easiest way to spend Bitcoin anywhere in Malaysia or beyond. You need to tell me the steps, so I will break it down into 5 simple point form steps. 5 simple steps to get a crypto debit card. Think of this process as setting up a special prepaid card that you can top up with your Bitcoin. Step, what you do, simple explanation. Step 1, choose a provider. Pick a large trusted crypto company that offers a Visa or MasterCard in your region, like Link2Crypto.com or Binance, or check for local Malaysian or Singaporean services.
So that's where
Step
those
2,
guys come in.
set up the account. Download their mobile app and create an account. You will need to complete the mandatory ID verification, sometimes called KYC or Know Your Customer. Step 3, verify your identity. Upload copies of your national ID or passport and provide a proof of address, like a utility bill. This is a legal requirement, just like opening a bank account. Step 4, apply for the card. In the app, go to the card section and follow the instructions to apply for the virtual.
Okay, I get the idea. I need to look for companies like Binance, and these are the people that allow me to, link up to Visa or MasterCard, as long as I have Bitcoin, right? And I just need to, get a card or something. Okay, so this one, not a problem in terms of logistics. I understand that. I think my viewers will get what you mean. So now let's talk about how physically difficult is it to actually get a single Bitcoin? And how much is a single Bitcoin against Malaysian currency?
That is a perfect follow-up question. It addresses the biggest misunderstanding about Bitcoin, that you need to be a millionaire to own one. Here is the simple, up-to-date information on the price and how easy it is to buy. 1. How much is a single Bitcoin in ringgit? The price of Bitcoin changes every second, but right now, a single whole Bitcoin is worth a lot of money. As of today, November 24th, 2025, 1 Bitcoin is approximately RM356,000. Note, this number is approximate and only for today. Since the price is volatile, it will change by the time you check it. 2. How difficult is it to get a single Bitcoin? In a physical sense, it is not difficult at all to buy Bitcoin. The process is very easy. However, financially, it is very difficult because of the high price. The good news is you do not need to buy a whole Bitcoin. Bitcoin is divisible into very tiny pieces. Think of it like a piece of gold that can be sliced up almost infinitely. The smallest piece of Bitcoin is called a Satoshi, and it's less than 1 ringgit. Key concept, buying a fraction. You can use the licensed platforms in Malaysia like Luno or Tokenize to buy a tiny fraction of a Bitcoin, starting with as little as RM10 or RM50. If you spend, you get. Simple example, RM100, a small fraction of a Bitcoin. It's like buying 1/3560th of a whole Bitcoin. RM356,000, 1 whole Bitcoin. This is the full price. The process is easy. 1. Sign up on a regulated Malaysian exchange like Luno. 2. Deposit ringgit from your Malaysian bank account. 3. Type in the amount of MYR you want to spend, e.g. RM100. 4. The system automatically calculates and gives you the corresponding small piece of Bitcoin. So while getting a whole...
And so let's just say I want to buy 100 ringgit worth of Bitcoin, which is a small, Satoshi size of a Bitcoin. And let's just say I buy like 1,000 ringgit worth of Bitcoin. Where is it stored? Is it stored in give me an actual website where I can buy it, and where is it stored, and who actually owns this website? And if they disappear, where does my Bitcoin go? Since I know Bitcoin is always recorded, right?
That is a great detailed set of questions that touches on security, regulation, and the true cost of Bitcoin. I will break it down into simple parts. 1. The smallest piece, Satoshi. You asked about the size of a Satoshi when you buy 100 worth of Bitcoin. A Satoshi is the smallest unit of Bitcoin, similar to how 1 cent is the smallest unit of 1 ringgit. 1 Bitcoin equals 100 million Satoshis. The size. Since 1 Bitcoin is around 356,000, 1 Satoshi is currently worth less than 1 cent, around 0.0035. So when you buy 100 worth of Bitcoin, you are actually getting about 28,000 to 30,000 Satoshis. You are buying a fraction, but it is measured in these small units. 2. Where is my Bitcoin stored? The wallet. This is the most important part. When you buy ARM1000 worth of Bitcoin on a website, it is stored in a digital wallet. It's not a bank account. Your Bitcoin isn't sitting on a hard drive like a file. What you own is a secret code, called a private key, that proves you have the right to move that Bitcoin on the global blockchain ledger. The website you use, the exchange. For Malaysian users, the simplest way is to use a platform regulated by the Securities Commission Malaysia, SC. Actual website examples. Luno, Luno Malaysia, SDNBHD. Tokenize, Tokenize Technology, MSDNBHD. SINEGY. Hada, MX Global, Torum are also registered. Who owns it? These are private companies, like Luno, which is part of a global group, but they must adhere to strict rules set by the Malaysian government, SC, to operate legally. 3. What happens if the website disappears? This is the biggest risk and the difference between traditional banking and crypto. Your Bitcoin is not safe if the exchange goes down. Big risk. When you buy Bitcoin on Luno or Tokenize, it is automatically put into their custodial wallet. This means the exchange holds the secret private key for you. If that exchange is hacked, goes bankrupt, or disappears, like the famous Mt. Gox or FTX incidents, your Bitcoin is stuck because you do not have the private key. Important saying, not your keys, not your coins. The safe way to store it, cold storage hardware wallet. For any significant amount of money, even RM1000, experts recommend moving your Bitcoin off the exchange and putting it into a personal wallet where you hold the private key. A hardware wallet, like Ledger or Trezor, is the safest method. It's a small USB device.
So I get it. I understand that there's a lot of components to it, and the fact that once you have your, Bitcoin, then after that you have to store it in some kind of a wallet, a digital wallet, and it could be a physical wallet where it could be a USB. All right, so I understand that part. Now I want to go into FTX.
That's right. You've grasped the most crucial part of Bitcoin ownership. PAM's buying is easy, but secure storage is what matters most. You've nailed the main components.
All right, now I want to, talk about FTX. So a lot of people were scammed in FTX, but what really were they scammed? So if they bought Bitcoins from FTX, right? These are the people who are unable to access their Bitcoin, or are they just speculative investor in Bitcoin?
That is a critical question, and it perfectly highlights the danger of leaving your Bitcoin on an exchange. The FTX collapse was one of the biggest frauds in financial history, and it was a specific kind of loss. To answer your question simply, most people who lost money in FTX were both. They were scammed out of the Bitcoin/cash they owned, and they lost the chance for their speculative investment to grow. Here is the breakdown of what really happened, explained simply. 1. The core scam. Theft of customer assets. This is the most direct answer. FTX was an exchange, meaning customers kept their money, their Bitcoin, their Ethereum, or their US dollars/ringgit on the platform, trusting FTX to hold the secret keys, just like you would trust a bank. The founder, Sam Bankman-Fried, was later convicted for stealing the key. He and his team secretly took the money, the Bitcoin and cash, that customers had deposited on FTX. Misuse. He didn't just speculate with the company's money. He treated the customers' deposits as his own company's piggy bank. He transferred billions of dollars in customer funds to a separate, affiliated trading company called Alameda Research to cover its bad bets and fund lavish purchases. The result? When customers got scared and rushed to take their money out, a bank run, the funds were gone. The money was not where it was supposed to be. In simple terms, if you deposited $10,000 worth of Bitcoin on FTX, that Bitcoin was physically gone, stolen, and used for other purposes. It was old-fashioned embezzlement hiding behind new technology. 2. The loss of speculation. The market timing problem. This is the second part of the loss, which adds salt to the wound for many customers. The freeze. When FTX filed for bankruptcy in November 2022, all accounts were frozen. The bankruptcy court decided that the money owed to customers would be based on the price of crypto on that day of the collapse, not today's price. The missed gains, Bitcoin and other crypto prices have increased significantly since late 2022. Even if customers eventually get back 100% of the ARM value they had on the day of the collapse, they missed out on the massive gains their Bitcoin would have made if they had been able to hold it until today. In simple terms, if you had deposited Bitcoin worth $10,000 in November 2022, and today that same Bitcoin is now worth $30,000, you are only being paid back the original $10,000 if they pay 100%. You lost the $20,000 in growth. Crux of the matter, FTX users were victims of
All right, I love this story, and I think I might actually do a video on FTX and Sam Friedman. I roughly kind of know the idea, but I don't really know the details in terms of how things actually work. I just know a lot of people are scammed, and I just know that, Sam Friedman had to go to jail. So that will be another episode. But yeah, let's go into why are people investing in Bitcoin so much without actually owning the Bitcoin?
That's a brilliant question. It moves us from the technical side of Bitcoin to the financial side, which is where the biggest money moves happen. You are spot on. A huge amount of Bitcoin investment happens without people actually owning a single Satoshi in a digital wallet. They are betting on the price using traditional finance tools. Here is the simple breakdown of why people invest in Bitcoin without owning the crypto itself, focusing on two key reasons: ease and regulation. 1. Ease of use, the stock market bridge. The main reason is simplicity and familiarity. The problem: traditional investors, like retirees, pension funds, or large banks, don't want the hassle or security risks of setting up digital wallets, remembering private keys, or dealing with unregulated crypto exchanges. The solution: Bitcoin ETFs, exchange-traded funds. What it is: think of an ETF as a basket of investments you can buy with your normal stock trading app, like Fidelity or TD Ameritrade. How it works: a company, like BlackRock, creates a fund and buys and securely holds millions of dollars worth of actual Bitcoin. They then sell shares of that fund on the regular stock market. The benefit: when you buy a share of a Bitcoin spot ETF, you are essentially buying a tiny, regulated, and professionally held slice of the actual Bitcoin, but you never touch the wallet or the crypto itself. You get all the price upside without the worry of storage. 2. Regulation and
Hold on, this is a little bit too much for me. So can you explain to me again what is ETF? And can you explain to me why is people investing in the idea of Bitcoin without actually earning Bitcoin? But make it simpler, make it step by step. Well, tell me a story.
I understand. Sometimes we need to slow down and hear a story to really let the idea sink in. I will
Thanks for
make this
understanding.
explanation super simple using an easy analogy. Let's call this the story of the digital gold vault. 1. The story of the digital gold vault. What is an ETF? Imagine a rich, secure company like BlackRock decides to go into the gold business. Step 1. The company buys the gold. This big company goes out and buys 1,000 bars of physical gold.
Or Bitcoin.
They don't store it in their office. They put it in a massive, high-security vault guarded 24/7. This vault is their fund, and the gold is the asset. Step 2. They create tickets, the ETF share. The company then prints 100,000 tiny paper tickets.
Oh.
Each ticket says, "This ticket represents 1/100th of 1 bar of the gold in our secure vault."
It's like a bond, right?
These tickets are the ETF, exchange-traded fund shares. Step 3. Selling the tickets on the market. The company sells these tickets on the regular stock market, the place where people usually trade shares of companies like Apple or Petronas. The key idea: you, the investor, go to your normal bank and buy one of these tickets, the ETF. You might pay RM100 for it. Do you own physical gold? No. You have never touched a gold bar.
I
You
see.
don't have a vault. Do you benefit when gold goes up? Yes.
That's
If the price of
crazy.
gold goes up, the value of your little ticket goes up too. A Bitcoin ETF works exactly the same way. The big financial company buys and secures the actual Bitcoin in their digital vault, and you buy the tickets that track its price. 2. Why invest in the ticket, the ETF, instead of the Bitcoin itself? Why would anyone buy a ticket instead of just buying a piece of the gold, Bitcoin, directly? 3 simple reasons: safety, ease, and rules. Reason 1. Safety, the FTX lesson avoided. Direct Bitcoin. If you buy actual Bitcoin, you have to manage a digital wallet and remember a super secret key. If you lose the key or get hacked, the money is gone forever. High security risk for you. Bitcoin ETF. The big company manages the wallet and the security for you.
All right, I understand now.